you're so poor and out of a job, you need the cash. So we arm twist it. That's sort of like an unofficial confiscation, the way I see it. In fact, I had this conversation with somebody the other day, when we were talking about these cash for gold types of initiatives that are out there. And of course, at the same time, you have these gold sellers that will sell you gold coins at absolutely astronomical commissions and prices. And so you really kind of have to be careful when you play in that market. But it's just absolutely unreal how this country's relationship with gold is so different from the way it is over in China. And how interesting that China has plans for the future, 5, 10, 100 years into the future. This country, we can't even see past the next election or past the next quarterly result. Is it any wonder we're in the trouble that we're in?
Well, that's for sure.
Well, I think that I also saw an interesting article here that was in I've forgotten exactly where it was, but basically the headline. It was on Bloomberg. And the headline was that Obama pays more than Warren Buffett as the U.S. risks its AAA rating. And it talks about how that Warren Buffett can borrow money, criminal that he is, for less money than the United States government can. Speak to us a little bit about what's happening in the bond market and why rates seem to be thoroughly disconnected. I get a lot of questions about that it's hard for people to understand exactly why the bond market doesn't seem to be following economic reality. And obviously we know there's some manipulation going on and so on, but just kind of give people an overview of that. You'll handle about a half a dozen of my questions all at once.
Well, the bond market is manipulated by the U.S. government, particularly the short end. That's 1 month, 3 month, 6 month, 1 year paper. Particularly the stuff that's real up close, the 1 month and the 3 month. And because of that, interest rates are kept low. And that facilitates the market not collapsing, because if a large corporation can go out and borrow money at, say, 3%, that's pretty inexpensive, that's pretty good. And so the big corporations, they'll be able to borrow money, and they will borrow money to make more profits. The banks don't want to lend to the medium-sized and the small-sized companies, and so I think that more and more of them are going to go out of business. And if you notice, they've done the same thing to individuals, cutting back or cutting off completely their credit lines, or cutting off the lines that they have on their credit cards. And I hear these stories every day. And so those people can't get loans, and because the banks don't want to lend to them, because they know it's coming, and they don't want to lose money or any more money than they have already. And so that's why banks are holding cash, and a lot of it is going into treasuries because they're having such difficulty funding them. And also, what you have as well is a crowding out that's taken place. The United States government needs so much influx of capital when they're selling treasury paper, treasury bonds, that what happens in the marketplace is that others can't borrow money. And usually it's in the form of bonds by corporations. And very shortly, I think after the middle of the year, I think interest rates are going to start moving up again and they could go up a point before the end of the year, maybe a point and a quarter. And in other words, the 10-year note, which is 3.83 today, that could go up to 5%. And of course, mortgage rates could go up a point and a quarter, which would put them in 6.25, and that's going to be very difficult for the real estate industry. And so, eventually, that's what's going to happen. It has to, no matter how much money they put into the market. And so that's the general direction of where money markets are going. There's 10 times more money in bonds than there is in the stock market.
Absolutely. Absolutely. We have a caller. Denise, you're on the air. Welcome to the Sovereign Economist.
Thank you. I have a question for Bob. I wanted to know, what does he think about the Chinese yen, if they would also crash that? Or will that be staying, like if you have some of your money in that, if it will stand?
Well, first of all, gold and silver are now in an 11-year bull market. So my adage is, why would you want to be someplace else if you're looking at and you understand that gold and silver has got a long way to go and probably the biggest bull market in history?
That's a good answer.
And, currencies are okay, but for the last 7 years, every single one of them have lost ground against gold, and they will continue to do so. So the Chinese yuan will have problems because as the world economy, probably in a year and a half to 2 years, will slow down precipitously. They're an exporter. And also, they're a totalitarian communist government. They have 30 million unemployed, and that doesn't count the people out in the rice paddies. And so you have to look at the fact that they just threw $1.2 trillion into their economy in order to get it to revive itself, you call it that. And now they've got this terrible bubble both in the stock market and in real estate. And so China is not without problems. And China, the minute it really turns down, they're going to have a revolution.
Denise, anything else you have?
Oh, that's it. Thank you very much.
Good. Well, thank you for calling, and thanks for listening. Bob, I have another question in the chat room, and somebody was reading our minds in our off-air conversation. Cindy writes, if you were to move somewhere or to buy property in another country, where is a good place to go?
Well, if you're willing to put up with socialism, there's always Canada, New Zealand, and Australia. If you're willing to put up with communism, there's Ecuador, Bolivia, and Venezuela. And now even Uruguay has elected an ex-Marxist as their president, which really kind of blew me away. And I've lived there before. And so what's left? Panama, Costa Rica, and Mexico. There's a lot of facilities and a lot of Americans in Panama and in Costa Rica. Costa Rica is not too much to do. It's beautiful, and the temperatures, except on the sea coasts, are very, very good because San Jose is at 4,800 feet, and I know I've lived there. Panama is nice, but it's very humid, but it's another good destination. They use the U.S. dollar there. And there's Mexico. And if you go into central Mexico, in any one of the cities that have between 60,000 and 2 million people. It's just like living in the United States. And medical and dental care is excellent. And they do have inflation, probably about 5%. At least they admit to it. And it's a great retirement place.
Great. Well, thank you for that. Lainey writes us, and she says, what large banks, in Bob's opinion, will go under? What large banks will they not save? And then she has a follow-up question after that.
Well, I think the most vulnerable is Bank of America because they've been dumping a lot of garbage in it. And that's probably, that and Citigroup are the probable candidates. If they were to consolidate them with other banks, they won't let them go under.